charges against Lopez offer a textbook example of red flags every investor should be aware of, whether you're dealing with a social media guru or a traditional broker. The first major warning sign was the promise of high, guaranteed, or preferential returns. The REV offerings promised up to 25% annualized returns on unsecured notes, a rate far exceeding typical market performance for low-risk investments. In the legitimate investment world, high returns always come with high risk, never a guarantee. Second was the lack of transparency on the use of funds. Investors were allegedly told their money would be used specifically for the individual retailer they invested in. The commingling of funds between different portfolio companies, allegedly to keep the scheme afloat, is a major violation and a classic Ponzi trade. As an investor, you must always demand clarity on where your capital is going and how it's being deployed. Never trust a blind pool of money with a charismatic figure at the helm. Third, the lifestyle porn used as marketing. While Lopez built his brand on showing off his wealth, this is an image, not a financial statement. A flashy lifestyle can serve as a distraction from the underlying economics. Genuine financial success rarely needs to be screamed about in every ad. Always look at the substance of the business, not just the material possessions of the founder. If the majority of a business's revenue seems to come from selling the idea of the business, that's a massive red flag. The downfall of Rev highlights a harsh reality. The pursuit of the good life can lead people to overlook fundamental due diligence. The most sustainable path to wealth is built on patience, education, and sound, vetted investment principles, not on chasing the next big guru's secret.